Hello traders, Gary Wagner here. It is just before 2 o'clock in Honolulu, before 7 o'clock in New York. It is Wednesday, December 16th, 2020, and this is the Daily Report for Gold and Silver. Nice follow-through moves in both gold and silver, taking them higher. And that prompted us to send out a trade alert yesterday. We'll discuss that in detail when we look at our technical studies. But first, to the price board. There is no doubt that today was a key and very critical day with two important components that market participants focused upon. Of course, the FOMC meeting concluded today. That was followed by a statement as well as a press conference by Jerome Powell. In essence, the Fed reiterated their stance to be highly accommodative, to continue purchasing and increasing their asset balance sheet to the tune of $120 billion per month, as well as start working with interest rate yield swaps. However, it was Jerome Powell's press conference that really took gold back to the highs achieved today. And the high that we have today is $1,870. We closed at $1,868.80, so just $1.20 off of the high of the day. We did send out trade alert yesterday, but first I simply want to go through the prices. Today, gold gained $13.50 and closed at $1,868.80. Spot gold also had significant gains, a few dollars below the February futures contract at $1,864.20. Silver again shined the brightest, gaining about 3.5% and is now trading at $25.50.5 and that is pretty significant. The dollar, which was fractionally higher before Powell's press conference, reversed and actually closed lower to the tune of about 0.3%, currently at 90.165. We also recommended that you enter GLD and SLV. In that case, you have to buy the open of the market, and that came in at 174.13. The market is currently fixed at 174.90. The same with SLV, which gained 82 cents per share and opened today at 23.22, currently at 23.62. One of the unique benefits of residing in Hawaii is that because we are literally the last time zone, it allows traders such as myself to follow not only New York, which opens in the middle of the night for us, but particularly London and Hong Kong, which begin in Hawaii at around 5 o'clock. London opens at approximately 10 o'clock, which corresponds to 2 o'clock in the morning in New York. We issued the trade alert to buy February gold at the market. Last night it was $1,866, placing our stop at $1,816. We also added that those in New York should buy either market on open or when they receive the trade alert, meaning an hour or so before the markets open in New York. Traders who bought in the morning got in at roughly $1,860. Those that bought when the initial trade alert went out, in other words, our overseas traders, got in roughly at $1,866. And I feel very comfortable that we will see higher pricing in the next week to the end of the year. Traders, maintain your current long position in gold and maintain your current stop. Next, we issued a trade alert for our Forex traders to initiate long positions in Forex gold at $1,862. Traders entering Forex in the morning got in at approximately $1,855. Maintain your current long position in Forex gold as well as your current stop. The trade recommendation we sent out also addressed silver, recommending that you initiate a long position in March silver futures. The market was currently trading at that time at 25.25. We're placing a stop at 23.50. And today we had silver closed at 25.57. $1.50. So we have about 25 cents on that trade. Maintain your current long silver position. Maintain your current stop. Our trade alert also recommended that you purchase shares in the ETFs GLD and SLV. We would go off of the opening price for our entry price, which was $174.13. GLD closed at $174.90, so we have some gains in terms of that ETF. And then lastly, SLV was a recommendation, and once again we would go off the open, which was $23.22. That is your entry price, and the Silver Trust closed at $23.62, so we have modest gains in both of those electronically traded funds. Lastly, I do want to answer a question that came from one of our subscribers, and he said, just another quick question. Is there a reason why you no longer cover or recommend Nugget, the Direction Daily Gold Miners ETF, and only GLD? Because he's looking for something better leveraged in terms of the return than gold. I typically recommend Nugget when we've got a clear and solid uptrend. When we're trading either in a downtrend or a sideways market, I believe that Nugget gets over exaggerated, and it's a very difficult instrument to control risks except for specific scenarios. In the case of what we're looking at now, it might make sense to add that, but I did want to answer your question as to why we have not included it on the last couple of trades. Traders, maintain all of your positions, maintain your current stops. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.